Hey guys, it's John again. Today we're going to look at Churchill Capital Corp 3, soon to be Multiplan, stock ticker CCXX. So today on Yahoo Finance, a new article was published today. Churchill Capital Corp 3 and Multiplan announced launch of refinancing process for Multiplan's existing 7.125% senior notes due in 2024 and senior secured credit facilities. Multiplan delivered better than forecast July and August revenue performance and reconfirms its 2020 outlook. Churchill 3 invites investors to a conference call to receive an update on the business combination. That was this morning. Churchill Capital Corp 3 reaffirms conviction that closing conditions to his business combination with Multiplan will be fully satisfied on October 8th. That's just 3 days from now, so we're looking at Thursday this week. Let's continue on with the rest. To the U.S. healthcare industry, announced today that based on Multiplan's recent strong financial performance and favorable market conditions, Multiplan has launched a process to refinance with the goal of meaningfully lowering annual interest expense, extending maturities, and increasing access to liquidity. Multiplan is in active dialogue with its advisors and certain rating agencies. However, the timing in terms of any such refinancing are subject to market and other conditions, and there could be no assurance that such indebtedness will be refinanced. So in other words, it's not set in stone yet, but they're looking to get their long-term debt, senior debt, refinanced. Multiplan, based on stronger than previously forecast revenue performance in July and August and preliminary results for the quarter ended September 30th, 2020, announced that it's reconfirming its 2020 outlook. So we see that they're trying to refinance their existing debt, but what does this mean for Churchill Capital Corp and Multiplan, and why would they do such a thing? So I pulled up this article on Investopedia addressing why a company would refinance their debt. Refinancing debt is a common way to take advantage of improved financial conditions in the market or the improved health of a corporation that allows a company to put itself in a stronger position both operationally and financially. There are a few situations that arrive that propel a company to refinance, which are discussed in this article. Most times, companies refinance or restructure their debt when they are in financial difficulty or are unable to meet their obligations, generally before filing for Chapter 11 bankruptcy protection. However, that's not always the case. Favorable market conditions or the strengthening of a company's credit rating may also lead to the refinancing of corporate debt. So what are the key takeaways here? Companies often refinance their debt when they're in financial duress and cannot meet their debt obligation. Companies that are not in financial duress refinance their debt to take advantage of lower interest rates or an improved credit rating. Refinancing debt results in lower monthly payments, which in turn frees up cash that can be utilized for other needs. A company can refinance its debt by replacing its current debt with a lower interest debt rate. So I believe, in my opinion, that Multiplan is looking for these three right here. So in the current market conditions with RONI and fallen interest rates, it makes sense for companies to refinance their debts to get lower interest rates because in the long term, they're saving money and allowing more capital to be immediately available to them so they could use it to either grow their operations, reinvest into developing new technologies, or R&D. And in this case, I believe that's what Multiplan is trying to do, is have more cash available to them while they're in the process of expanding their business. So that being said, fundamentally, let's look at the technicals. So here I have the 4-hour chart pulled up. I have a few levels of support and resistance marked on the chart. This long candlestick we see here going down to $9 was today. If we go down to a 1-hour time frame, we see price pierce through all these support levels down to the $9 level and immediately traded back up into this $10 range. Now this is purely my opinion as always, but what I see here on the technical side of things, before that low, we had a previous low of $9.46 here. And if we go forward in time to today, we see that that low was broken. And for stocks to go up, I believe they do have to come down substantially in order to go up substantially, or in some cases trade sideways for a really long time. In this case, I think this is a move for Churchill Capital to move up, and I think it's going to be another substantial move up. Now, where exactly do I see it going? Price level that really sticks out to me like a sore thumb is this price point on September 2nd with a high of $11.80. Another notable level we have is the $12.60. That was around July, early July. So between these two highs, we had about maybe 2 months of space. So from this $12.66, we had about a full month of downwards movement into the $10 mark. This mark was previous support in the past, and some more upward momentum continued for about another month, hitting that high of $11.80. And here we are experiencing yet again another month of downwards movement, even larger than the last. So something that would really change the trend on this stock would be a break above this last high to create a new higher high, followed by a higher low, which could be a nice entry point if you're waiting for some kind of bullish confirmation. But what I'm seeing here with this strong movement downwards into this $9 mark and immediately back up, which blew out this last low, if there was any sell orders down here for a breakout lower, they're stuck now in the short. And ultimately those shorts will eventually get called, and I think this could lead to a short squeeze on the higher side past this $12.66 mark. Now, when will that happen? I don't have a crystal ball yet, but when I do, I'll make sure to let you guys know first. All in all, I think if you're invested in SPACs or looking to invest in SPACs, CCXX is one to look at and is aimed at saving insurance companies money. And the more money they can save insurance companies, the more money they can generate. Healthcare spending in the US is a multi-trillion-dollar market, so if they can capitalize on even a small portion of this, I see Multiplan having a really bright future ahead of them, and it's just a matter of time. You can't rush greatness. So that's it for this video. Thank you guys for watching. Make sure you hit that like and subscribe button and turn on the bell notifications. It's totally free and I don't get paid to make any of these videos. It's strictly my thoughts and information I find online before you guys might get a chance to see them. So I hope you learned something in this. Happy trading, and I'll see you in the next one.